Hello everyone, Joe Vitale, American Retirement Advisors with the Gradient Investments weekly talking points for the week ending May 27th, 2022. And we hope you all had a great Memorial Day as we remember our veterans and those who gave their lives and their service to our country so we could have our freedom. We're very grateful for them. Hope we're able to pray for them and for their families and enjoy our family time. So let's get into it. The markets were closed on Monday in observance of Memorial Day. U.S. equities rose dramatically last week in response to a slight decline in the inflation rate. So the benchmark S&P 500 gained 6.62% last week. The Russell 2000 was up 6.49%, and the NASDAQ was up 6.85%. In the U.S., consumer discretionary and energy were the best performing sectors, while healthcare and communications were the laggards. Now, large cap growth and small cap value were the best performers by style. Overseas, the developed markets, which was the EFA, rose 3.51%, while the emerging markets rose 0.92%. In fixed income, the minutes of the most recent Federal Reserve Open Market Committee were released, in which the members stated that ongoing increases in the target range remain appropriate. Importantly, the chair stated that due to stubbornly high inflation, the Fed may have to raise rates beyond its 2 to 3% estimate to find the point at which rates neither stimulate growth nor dampen demand. Now, we talked about this. Remember, they said inflation was transitory. They didn't say they needed to raise rates. They held them for so long, which is why we have inflation right now, because the spending is out of control. The bond issues were out of control. Everything is out of control cost-wise right now. So now they're trying to make up for it by raising rates. Well, the market's starting to price that in already, so we're starting to see that a lot of these future rate hikes are already priced in, which is why the market's been going down. Maybe we're at the bottom, maybe we're not. We'll see, but we are in an election year as well, so we'll kind of see what that is. We're a little bit optimistic, but we have to be realistic as well. But that's what the market does. It goes up and down. Long term, we're going to be okay. Let's talk about the average price for gas in the U.S. was 4.6 cents per gallon last week, 51% increase from Memorial Day a year ago. The price of jet fuel in North America, meanwhile, has risen 116%. Right now, look at the pumps. Where are we at? $4.79 a gallon, which is horrible. Economic data, inflation as measured by Price Consumer Consumption Expenditures Index, the PCE, was 0.02 month over month, or 6.3% on a year-over-year basis, below the consensus forecast and the first sequential decline in many months. So maybe that inflation transitory is coming down a little bit, but it's taken longer than they anticipated, and we're feeling it. After excluding volatile food and energy, the core PCE was in line with expenditures rising 0.3% from March, or 4.9% increase year over year. Now, sales of homes in the U.S. fell 16.6% in April for the fourth consecutive month of declines. Unit sales of 591,000 annualized were well below the consensus forecast of 750,000. Also, new home sales in March were revised downward significantly from 763,000 to 709,000. And new orders for manufactured durable goods in April increased 0.4% below the estimate of 0.7. This increase is the sixth in the last of 7 months, followed by a 0.6 in March increase. Now, transportation equipment led the increase, rising 0.6%, excluding transportation of new orders increased 0.3%. And that's the one thing we talk about with the houses. How much is it going to keep going? What's the the housing is going up 20, 30% a year. We're starting to see that come down a little bit. Interest rates are up over 5%, but still, there's still so much demand and so little inventory. I think it's going to cool down, but it's going to take a while to really cool down. There's still not a whole lot of inventory out there, and things are still flying off the shelves as far as houses are concerned, but we're starting to see it slow down a little bit. Okay, talking about company news. Costco Wholesale, which is a Core Select holding, reported revenue and earnings that exceeded analyst expectations, including some store sales growth, excluding gasoline, of 10.8%. Now, membership fees rose 9.2%. Shares rose 13% for the week, which is wonderful. JP Morgan, which is a G50, Contrarian, and a Core Select holding, rose 11.9% last week. The chairman and CEO, Jamie Dimon, told a meeting of investors that the U.S. consumers are in good financial shape and credit losses at the bank should remain abnormally low throughout the next year. But he's also talking about a bad recession, and he's also talking about a hurricane in the financial market. So that's affecting the markets this week a little bit. That's what's happening this week. Now we'll see, because we're hearing a little bit of both. I mean, I think he's pricing some of that in right now, but I think what we're seeing a lot of times is just like I just talked about their report and what their earnings are. They're starting to under-promise quite a bit so they can over-deliver just to manage expectations. Let's talk about Lowe's, which is a G50 core select holding, increased its dividend, get this, by 31%. Right? What do we talk about? Dividends get raised a lot of times. It's not a guarantee, but that helps the income in retirement. Reflects the strength and consistency of our cash flow and our continued commitment to returning capital to our shareholders. According to their CEO, and yield on the new rate is 2.1%. So that's it. Thank you so much for being part of the ARA family. To contact us, give us a call at 855-756-5700. Visit our website at aradvisorsinc.com. Make sure you share this with a friend if they would love to get our newsletter. If you're not already getting it, go to our Facebook and YouTube channel, scan the QR code, subscribe. Make sure you let your friends and neighbors know so that they can get in on the know if they're not already. That's it. God bless you. Have a great week, and we'll see you again next week.